Hello, everyone, and thank you all for joining us during the Lytham Partners Spring 2022 Investor Conference. My name is Ben Shamsian, Vice President of Lytham Partners. Our next presentation comes from Pivotree, ticker symbol PVT on the Toronto Venture. Presenting from the company is Bill DiNardo, CEO and Director. Today, I've asked the company to briefly run through the slide presentation, and then we will engage in a fireside Q&A session. As a reminder, the company is available for one-on-one virtual meetings. If you have not already signed up, please send me an email at shamsian@lythampartners.com. That's SHAMSIAN@lythampartners.com, or visit lythampartners.com/virtual and click the one-on-one meeting request button. With that said, now let me turn the presentation over to Bill DiNardo, CEO of Pivotree. Bill, please proceed.
Thank you, Ben. My name is Bill DiNardo. I'm the CEO of Pivotree, as Ben said, and I'm happy to be here today to introduce you to Pivotree and the frictionless commerce marketplace that we're working in. I'll give you a quick company overview, explain what we do, describe our business units and the portfolio services that we offer, and hopefully give you a good overview of why we're succeeding in the marketplace that we're in. Our vision is a future where commerce is frictionless, and our mission is to make it easier for businesses to move towards that state of frictionless commercial transactions by starting with practical solutions and adapting them relentlessly to make them accessible to all. We believe our customers can be more productive, more profitable, and be more competitive by applying frictionless thinking to their commerce strategies. Pivotree is a trusted digital commerce services provider for market-leading brands to design, build, and manage their e-commerce and commerce ecosystems overall. We create a frictionless commerce experience for their customers across their entire buying journey, from finding the item to buying it to getting it, all the while building trust into the experience. Some people ask, what is frictionless commerce? Well, frictionless commerce describes a method of using data from devices, apps, websites, to integrate buying opportunities as simply and seamlessly as possible into consumers' and customers' everyday lives and their activities in their natural environments. We design, build, and run complex commerce systems for over 250 of some of the largest retailers and branded manufacturers in North America, many of them global brands. Historically, we led with e-commerce, but over the past 12 months, we've added scale to two very significant categories in supply chain and data management through both organic growth and key acquisitions. We have over 600 pivoters around the world in the US, Canada, Spain, Brazil, and India. We offer professional service projects that help our customers stand up complex digital commerce environments. We do recurring managed services to help them maintain and expand those environments, as well as using our own IP to help make all those things work efficiently. We just announced our Q4 results with $22 million of in-quarter revenue. We are running around $88 million annualized, with 50% of that being recurring revenue. Our clients perform more than $9 billion of GMV through the systems that we manage for them. We have a strong balance sheet with $25 million of cash and an acquisition line of credit adding another $20 to $25 million. We have 250 customers globally, and our customers include many well-known high-profile brands in retail and large B2B manufacturers. There are many brands that we cannot name, but they're not included on this list. But the household brands we represent are producing, as I said, more than $9 billion of GMV, or gross merchant value. Today, we may be helping them in one category, but over the past 6 to 12 months, we've been adding scale and depth in our other categories with our recent acquisitions in supply chain and data management, and we continue to deepen the relationship with these great customers. Let me describe a little bit of what we do and why it's relevant. I think the context of how commerce has been evolving is an important first part of this conversation. So for decades, if not hundreds of years, the way that retail worked really hadn't changed much. Not until at least the internet really started to take hold and change the way shoppers could browse for and purchase items that they were looking for. As a result, digital tools reshaped how we now find products, transact, and receive those things. They've also changed the way that we make things secure in a trusted environment. But there were many old traditional ways that people discovered what they were looking for and eventually went to a store to acquire them. In the B2B world, it's similarly gone through a transformation. There's almost 4 times as much gross merchant value in B2B as there is in B2C. And the line between B2B and B2C is blurring. A product or service can find many routes to its destination for consumption. We've helped many large retailers and branded manufacturers on their digital transformation journeys from find, buy, get. And again, building trust into that entire experience set. But it's still really early days of transformation, and it will continue to unfold over the next decade. This was not simply a case of the pandemic creating opportunity. This has been a march since the mid-90s to really leverage digital transformation and technology into the commercial transaction experience. So our customers are not the ones that are just looking to get online. They're already there. They're setting the foundation for creating frictionless experiences in the future. As I said, they do $9 billion of gross merchant value transactions. These are not greenfield projects. When we think about the top 1,000 brands that consumers know and love, there's tremendous dollars and investment at stake. These folks have a lot more to lose than some of the startups, and they're working hard to stay ahead of the competition. Again, most of them are already selling online. In fact, every single customer we work with is selling online, but they're at various stages in their frictionless evolution. We actually did a recent study working with Environics Research, and they found 49% of consumers that shopped online in the past 6 months were dissatisfied with their overall commerce experience. Now, this manifests itself in many ways. It can be having to line up and wait outside at a click and collect, or not enough detail on sizing to make a purchase, shipping delays and out of stocks. All these things create friction. And all these various points of friction are barriers that can leave tremendous dollars on the table, or worse, cause customers to shop elsewhere. What compels us for the next decade really is the enabling technologies that will continue to evolve and mature and affect the end customer's expectations, whether that's machine learning, blockchain, AI, 3D printing, 5G. These are all examples of technologies that will continue to evolve the commercial transaction systems that we use today. So how do we stand out in that? We're the only end-to-end vendor supporting clients from their strategy, platform selection, deployment, and hosting through to ongoing support. Our 3 major goals for every customer are simple: define business-focused objectives, develop strategies that aim to avoid building technical debt, and set a measurable return on investment. When it's executed successfully, all of the above ensure that our customers are always ahead of their competition. So how do we do that? Well, let's keep going through some of the portfolio of what we do and how we do it. So we operate in 3 major categories: commerce, data management, and supply chain. Within each category, you'd find the traditional methods of delivering services: professional services to help customers stand up those environments and integrate them. We partner with many of the leading companies, and you see them at the bottom of the columns, that to help them implement and make use of these systems. We provide managed services to help them operate on the cloud, provide application support and ongoing cybersecurity services. As we build on common requirements across our customer base, we've been launching new digital products that help them automate processes, provide integrations and analytics. This is the IP we're building on top of the services that we provide. The combination of what we offer is unique to the market. We go in very deep with our customers, we stay with them for a long time, and we can expand those relationships with these other services that we bring to the table. So if you think about the frictionless commerce ecosystem, it has many layers, and the tech stack is pretty intense. Today, we've identified these major areas that should all work together to ensure a frictionless experience for end consumers. Just like any mechanism, if one part of the system is broken, the whole ecosystem slows down. Some of the key segments that we support today, as I mentioned, are commerce, data management, and supply chain. Some of the things you see in here are what we do now, and some are what we have been entering and scaling and will continue to grow over the next couple of years. So how do we ensure this ecosystem is thriving all of the time? Through our end-to-end services that ensure we walk the entire commerce journey with our customers every step along the way. Our customer for life philosophy is simple. The left side activities align with the project work, from proposing the strategy to implementation. And then the right side activities relate to managed services, where we're there to stay and provide ongoing support. Because we work very closely with our customers to develop their digital commerce strategies and understand their needs, we're in a unique position to turn the work that we do into reusable IP that scales across our customer base. We build, sell, and deploy two different types of products: assembled and engineered. Assembled products are typically designed with third-party best-of-breed products, where we package them up, take a number of different ones, turn them into a value-based managed service, and deliver the business outcome with the solution that we've assembled. Rather than picking or selecting technologies and implementing them on behalf of customer, we do that work and make it easy for the customer to get the end benefit. A great example of an assembled product is our Cybersecurity Watch product. We've assembled the product with best-of-breed security vendors like Cloudflare, SentinelOne, and through our Security Operations Center, deliver a 24/7 managed security service to our customers. Engineered products are typically IP-based products, where we write the code and deliver service-based offerings. A great example of an engineered product is our data automation and onboarding tool called Dive. This technology, leveraging machine learning and AI, ingests and transforms data efficiently and error-free for our customers. Our code, delivered software as a service, again, solving a business problem with technology. All products carry roadmaps with future enhancements and life cycles attached to them. So this is real product development born out of the services work that we do and the challenges we discover with our customers together. So that's really us in a nutshell. Thank you for your time today. If you'd like to learn more about Pivotree, please contact me or drop a note to our sales team.
All right. Thank you for that overview. Let's expand a bit on a few topics. You did two acquisitions in 2021. Can you tell us a little bit more about what these two deals brought to your business? What has been the impact so far, and any synergies from these businesses in the future?
Yeah, we did two acquisitions in the second half of 2021, and that really accelerated our capabilities and our scale in two categories of the frictionless commerce transformation journey: supply chain and data management. We know all about the global supply chain issues that, frankly, are affecting everyone today. They've been exacerbated by some of what's happening in Eastern Europe. And Bridge Solution Group specializes in order management services, warehouse management, and application integration. This was a very timely acquisition when our digital commerce customers have started to shift their focus from getting the sale to delivering the product. In fact, really what we observed during the pandemic was all of our customers had online capabilities. People could go online, find what they were looking for, drop it into a cart, but actually getting it, that became more of the challenge. And we've seen our customers now shifting more of their dollars and their spend into the back end and the supply chain. Lots of synergies. The kind of customers that we work with have large, complex back-end fulfillment systems, and the platforms that we are currently now offering as value-add services are all ones that are already well established in these customers, and they're looking for integration and support. So there's been great synergies. We've been cross-selling to a number of existing customers, and we're actually in the middle right now of one of our biggest customers starting to take on more of our managed services with the supply chain. So really good synergies, and that's ultimately what we look for in any acquisition. Obviously, we're looking to do accretive deals. We want them to be strategic, and they have to be a good culture fit. And I would say both of these two most recent ones have done that in spades. The codified business on the data management side has been phenomenal in terms of bringing really high quality customers to us. It's got great gross margins. They are really delivering solution-based selling. And even though a lot of that business is professional service, the recent deals we've started signing are in content as a service and managed services. Again, comes from their depth of expertise, solving business problems, rather than selling billable hours and projects. So excited about both of these. You see some of the benefits in our recent results, including gross margin improvement, as well as our bottom line, both helped by this advanced scale that we've been able to bring to bear. So prospects for the future, very good. And again, we see our customers drawing our multiple categories now into conversations that we couldn't do 6 to 9 months ago.
Got it. A bigger picture on the M&A pipeline, how does that look, and what types of additional capabilities are you looking forward to add in the future?
Again, we're very excited about supply chain, and with it being the first acquisition and the entry into that category, we'd like to continue to add skill and scale. So we're out looking for the complementary acquisition to hopefully double the size of that business in 12 months. The data management side, we continue to see opportunities. A lot of what we're seeing there is about some of the software enablement. So a little less focus on just the service side or professional service and project. We cover a lot of the market now in terms of the skills we have. But what we're really excited about are some of the IP-based deals that we're looking at. And a lot of that has to do with automating more of the processes. What we've built, though, is a business development machine. And so this is not about a couple of deals. We see this over the next decade being an important part of innovation as well, identifying some of those smaller, mid-sized, innovative entrepreneurial companies and folding them into the business. As an example, the team we've built has reached out to over 1,000 prospects since December. We've converted 150 of those into our pipeline that are at different stages, and we have active deals now that we hope will turn into closed deals in the next 120 to 180 days.
All right, thank you. So you recently reported fourth quarter results along with record bookings. Can you tell us more about what's driving the booking strength and how that plays into your outlook for 2022?
Yes, the 16 million in bookings we had in Q4 was a record for us, along with record revenue of 22 million. So it was a very good quarter. We saw nearly 80% year-over-year growth in our recurring revenue bookings and nearly 350% growth in our non-recurring. So again, much of this resurgence was on the professional services. Professional service resurgence is a good thing. Those projects ultimately are the kickoff or start of a relationship. They turn into the recurring revenues. So you do see some connection between great growth on projects and PS followed by the recurring revenue and the managed services. Now, the acquisition certainly helped. We're seeing a lot of strength on the data management side. Both supply chain and data management are really scaling and growing well and driving a lot of those bookings. I think what's important is we've not only scaled our pipeline and book of business, but we diversified it. So we feel really confident that we're entering 2022 on much stronger footing. We're less reliant on a single business unit or a customer application profile. We've got great diversity. While we're very singularly focused on frictionless commerce, it is made up of many component parts, and we now have the capabilities to play across those many components.
Okay, great. What are the areas that you're investing in now, and how does that help create leverage in your business?
There's really three areas that I would simplify this down to: people, capabilities, and digital solutions. The people provide the skills and the insights. They allow us to engage with customers. We can solve immediate problems with skilled, talented people, and we're definitely acquiring and accumulating many of those. The capabilities is what obviously the customer base is looking for that they bring. Those capabilities, again, span across a number of applications and business context. Again, always with a view to frictionless, but those two really are the starting point. The digital solutions is about the future. So again, we start with people, but one of the areas I call out, I write a quarterly CEO letter that really helps to try and understand our business in more detail. One of the things I talk about is revenue per employee. And what's really critical in a labor market that's seeing hyperinflation globally is how do you get more leverage from your employees? How do you create more opportunity for them to create value for customer without having to constantly add more bodies? And that really comes from our digital solutions, the software that we're investing in, creating more automation, which again creates leverage for our people and their capabilities. So those really are the three areas we're investing in. Acquire great people, advance the skills and capabilities that they represent, and really productize those over time.
All right, great. Finally, what do investors not appreciate about your business model, and what is unique in your industry?
Some people see the project side of our business as lumpy, and lump us into the category of IT service provider. While this is an aspect of our business, first, our IT services are very specialized around frictionless commerce, and the gross margins are much higher for our business than other IT services business. In some of our BUs, it's nearly double the norm. Half of our business is recurring revenue. It's based on managed services and in the future digital solutions we've been talking about. This side of the business has an even stronger gross margin profile, more than 50%, with a path to 60. This is really an underappreciated aspect of the business. We trade on a value like we're all project-based revenue when we're far from it. Our gross profit profile shows this, and we believe it's a proxy for operating leverage that we expect to see as our business scales. Again, look at the gross margins, look at the revenue per employee. It tells a different story than just traditional IT service provider.
All right, great. Bill, thank you very much for your time today. We really appreciate it. To anyone out there who's not already signed up for a one-on-one, again, please send me an email at shamsian@lythampartners.com, shamsian@lythampartners.com, or visit lythampartners.com/virtual and click the one-on-one meeting request button. Finally, we have another presentation coming up here shortly. Again, visit the website for all details. And we hope you have a great rest of the day. Thank you.
Thanks, Ben.